Is long-term care insurance worth it? That's the question that we're gonna be answering today. Thanks for joining me. I'm Elliot Apple, founder and financial planner of Kindness Financial Planning. And today I want to start off by saying that I do not sell long-term care insurance or any other type of insurance. I am merely thinking about this through the lens of a financial planner who works with clients who have the question, how do I prepare for long-term care? Do I spend my personal assets? Do I plan on spending them down to go on Medicaid? Or do I want a long-term care insurance policy to help cover the costs? Let's talk about the cost of long-term care before we get into the long-term care insurance side of things. What could you expect to pay? Well, it depends on the location. I'd recommend checking out Genworth's cost of care calculator or any other calculator online, but I would also recommend contacting local agencies, assisted living facilities, or memory care facilities in your area to get a feel for what the cost would be. What I found personally is oftentimes the published rate that you see online is often not the rate that you will pay. It's often the minimum rate, and there's extra services on top of that. Most people aren't paying that base rate. But here's what I would say for costs. I would plan on somewhere between $30 and $40 per hour for in-home care. So if you needed to hire someone to help you move to the bathroom or to cook meals for you or do anything around the house, laundry, that sort of thing, maybe $30 to $40. But again, this is going to depend on your location and the availability of services. Many people are understaffed right now. If you're planning on an assisted living facility, I would plan on somewhere between $4,000 and $10,000. It's gonna depend on the type of care or type of living situation that you want and what that place provides. I've seen some that are cheaper, I've seen some that are more expensive, but somewhere in that $4,000 to $10,000 range. It may be realistically more to $4,000 to $8,000, but keep in mind that this is often a base fee just for the apartment. If you want to add on services, which you can often do in assisted living facilities, that is going to be an extra cost. If you're looking at memory care, I would say somewhere between $5,000 and $10,000, just because a lot of those facilities tend to be a little more than assisted living. They are locked facilities and they have different requirements from state governments typically. And then finally, on the more expensive end, nursing homes, I would just plan on $10,000 or more per month. Again, it depends on the location. Places like Alaska, for example, they can run over $20,000 per month, and lower cost of living areas, maybe it's less than $10,000, but this will at least give you a framework for how expensive long-term care is to help answer the question whether long-term care insurance is even worth it. Another thing to keep in mind is, what are the odds that you might actually need help with long-term care? Well, the odds are that about 70% of people at some point will need long-term care at all, and there's about a 20% chance that you may need it for longer than 5 years. That makes planning really difficult, and then on top of that, women tend to need care for an average of 3.7 years, whereas men only need it for 2.2 years. So you can imagine planning for this is very challenging. You may never need care, or you may need it for a very long period of time. And when we look at averages, that's gonna be skewed because some people, such as with dementia, may end up in a memory care facility for 10 plus years, and someone may die having never needed any sort of long-term care. You can't imagine though, if you needed care for a couple years and maybe you start off at a lower cost and then work up to a $7,000 monthly cost, you might be spending $100,000 to $200,000 on some long-term care type scenario. Or in the case of dementia, if you're in a memory care facility that's costing more than $100,000 per year, that might be over $1 million. One thing I would mention when we talk about the cost is oftentimes you're not adding what your current spending is plus the long-term care. So if you determine you're $100,000 per year on other stuff, your cost probably isn't going to be $200,000, just because when you enter these types of facilities, oftentimes transportation's included in different things, entertainment might be included, and travel expenses usually drop off because you're not traveling as much. So it's usually not one for one, we're gonna add that right on top. It usually works out to somewhere in between what you're spending and adding it all together. So usually somewhere in the middle, but it's not added on typically to everything that you're spending today. You'll have to know you're spending better, but typically I see that drop off where an assisted living or memory care facility starts to be the primary expense and a lot of the other expenses drop off. So what is long-term care insurance? It's insurance that's designed to help protect against a long-term care type of event, and usually you qualify for benefits for the policy to pay out under two scenarios. One would be a severe cognitive impairment, or two, you couldn't do 2 of 6 activities of daily living. These are things like bathing, eating, transferring, toileting, and those sort of activities for daily life. Now, you may be wondering, what type of long-term care insurance would I want? And there are many types out there, 3 in particular that I'm going to go over in the way that I label them today. One is a standalone long-term care insurance policy. Another is a hybrid life insurance policy with long-term care benefits. And then finally, annuity with long-term care benefits. People may frame these differently depending on who you're talking to, but this is how I'm going to talk about them. So number 1, a standalone long-term care insurance policy. What's nice about these is you're going to get the most bang for your buck. For each dollar that you put in, it's going to buy the most in benefits typically, because all you're buying is long-term care insurance. It's not bundled like it is with the other ones we'll talk about in a moment. Some people don't like these because there's no guarantee that your premium will stay the same. We saw this in the 90s and 2000s where carriers mispriced policies and they had to end up raising rates for that. Some people don't like the use it or lose it provision. If you put money and you pay into this policy for decades, there's a chance you may never get money out of it. If you die without ever qualifying for benefits, some people might see that as money down the drain. Now, personally, I don't. I have life insurance. I have not died. I am happy that I've paid that premium, but have never collected on it. Same goes for my homeowner's insurance. I've never had to claim on that, which is a good thing, and I pay that each year. I have had to make a claim on my auto insurance when someone hit me, and honestly, I'd rather someone have not hit me and still have paid that and never collected on it. So that is one way to think about long-term care insurance is if you die without ever having used it, likely life went okay in those situations. Another con of standalone long-term care insurance is that it can be hard to qualify sometimes. They're gonna underwrite and potentially look at medical records to figure out if you can even qualify. And if you've mentioned potentially to your doctor that you've had memory care or memory issues in the past, even just in passing, that sort of note might disqualify you. It's gonna come down to what they're looking at and figure out if you're going to qualify within their health class. So it can be difficult to qualify, and we'll talk a little bit more about when it might make sense to apply. But a pro is that these policies are cheaper. Again, you're going to get the most bang for your buck because for each dollar that you put in, you're just buying long-term care insurance. It's not going to things like a life insurance or an annuity product. Lastly, you can really customize these policies. There's 4 levers you can pull with these. One is the benefit amount, the benefit duration, the cost of living adjustment, and then the elimination period. So it's easier to understand these types of policies and how you can adjust the premium up or down based on these 4 levers. What about hybrid life insurance with long-term care benefits? There's 3 main policies that you could buy here. One would be a linked benefit. Another would be a long-term care rider on top of life insurance, and then another would be a chronic illness rider. And each of these is a little bit different. I'm not going to go into the nuance of them too much, only to say that the chronic illness rider is usually the less generous of those types of policies. A linked benefit would be more so paying in a lump sum, whereas the long-term care rider, maybe you design the premium to pay it for 10 years or for life. There's different ways that you can structure it. But with these types of policies, what you're really buying is a life insurance policy with some sort of long-term care benefit added to it that allows you to access the death benefit early under certain situations. And this is important to note because if you use it for long-term care, you're usually reducing your death benefit. So if you have a life insurance need, you need to weigh that against using it for long-term care or potentially getting a separate policy. Now, the downside of these policies are they are more expensive because it solves the problem for people who don't like standalone long-term care insurance of paying into it and not getting anything out of it. Assuming you pay your policy premium and it's guaranteed for life with the life insurance, either you're going to use it for long-term care or your heirs are going to get the death benefit. So you don't have to be worried about paying into something for a long period of time and not getting anything out of it. But the downside to that is you're likely going to pay more than you would with a standalone long-term care insurance policy. So you just have to be prepared to pay that higher premium if this is the way that you want to go about insuring for long-term care. Another benefit of these policies is for people with older life insurance policies where you might have a gain in the policy if you surrendered it, but you don't necessarily need that same life insurance policy and you might still qualify for a new policy today. You could potentially do a 1035 exchange, take some of the cash value from an older policy and move it into a policy today that would provide long-term care. So it's a way to repurpose an older policy where maybe you don't need the death benefit quite as much, but you still want long-term care benefits. You could potentially, if you're healthy enough, do a new application, apply for a new life insurance policy with a long-term care rider and do a 1035 exchange into it, so that way you're getting those long-term care benefits. Downside is you do have to qualify from an underwriting perspective. So if something happened in your life health-wise that would disqualify you from getting a new policy, you may not be able to get a long-term care policy or really a life insurance policy with long-term care benefits with that if you have health issues. Annuities with long-term care benefits are another way to plan for long-term care. And the benefit here is that you do guarantee your premium in a way, because oftentimes what you're doing is you're putting a lump sum into these products. It might be $75,000 or more, and it might buy 2 to 3 times the benefit for long-term care. So if you put in $100,000, you might get $200,000 or $300,000 that could be used for long-term care benefits. Another pro of this is you can do a 1035 exchange into these products. So if you have an old annuity that has high fees or is inefficient and it's just not what you need it to do anymore, you potentially could do a 1035 exchange into a new product that has the long-term care benefits. Usually it's a simple yes or no questionnaire. Health-wise, they're not going to order medical records or do as stringent underwriting as you might do on a life insurance policy or a standalone long-term care insurance policy. The con with doing long-term care insurance this way is that you are tying up quite a bit of money. So if you're taking a lump sum out of your bank account or brokerage account, you're putting in this annuity, you don't have easy access to it anymore like you did before. The other thing to keep in mind is if you're taking money from, say, a brokerage account that has capital gains treatment and you're putting it into an annuity and you don't use it for long-term care expenses, typically the gain that you take out is taxable as ordinary income, and that is gain that you're taking out first out of that as opposed to your cost basis. Now that you know more about different ways to access long-term care, let's talk about long-term care insurance and what it might cost. First, let's look at a standalone long-term care insurance policy. And again, we're going to go back to those 4 levers. You can design these any way that you want. I've assumed a $4,000 monthly benefit, a 3-year benefit duration, a 3% cost of living adjustment, and a 90-day elimination period. Just to give you an idea. Again, you can customize these to however you want, but we can look at this table and see that costs tend to be a little bit cheaper for males just because they tend to use these policies less. For females, it's going to be a little more expensive, but for a total pool of benefits of $144,000 to start, you can see the annual premium might be somewhere between $1,000 and $3,000, depending on your age and whether you're male or female. As you can see, costs tend to vary, but they might be anywhere from $1,500 to $5,000 depending on your age and whether you're male or female. But in my mind, if you're paying a few $1,000s and you instantly have access to money worth $144,000 for long-term care benefits, that's pretty good leverage. Now let's look at hybrid life insurance with long-term care benefits. Now, you can go to different insurance carriers. They're going to have different types of products. This is just one I had quoted out for me. But you can see here similar benefits to what we're looking at with the standalone long-term care insurance policy. As you can see here, costs are going to run anywhere from about $2,600 to $8,500 depending on whether you are male or female. And as you can see with this type of policy, it's going to buy you a similar pool of benefits as we talked about with standalone long-term care insurance, but it's also going to have an added death benefit onto it. So in this case, it's $96,000. If you use the policy for long-term care benefits, it's going to start reducing that death benefit. A common question that typically gets asked is, when should I buy long-term care insurance, or when should I start looking into it? And it's a tough question. My joking answer is you should have the policy in place the day before you need it. That way you don't pay any more for premiums than you need. But the difficulty with that is none of us know when we're going to have issues, when we might need long-term care. And that's the problem with insurance in general, is earlier is typically better because you don't know if you'll qualify later. For example, someone in their 30s might end up needing long-term care, or someone in their 40s. Other people may not need it until they're age 70 or 80. So it's tough to say, hey, you should do it at this age for sure. But typically it makes sense somewhere in your late 50s or early 60s. By that point, a lot of people haven't had health consequences that have disqualified them from getting a long-term care insurance policy. But there's always the potential that if you wait until that age, something may happen that may disqualify you from getting a policy, and then you don't have the option. So I know plenty of people who have done it earlier. We can look at declines by ages here. These are based on 2019 stats, but you can say even people who are under 40 have a chance to get denied. You can see there's about a 16% who applied did get denied. We can see on this chart though that in 2019 and younger, there were still about 16% of applicants that applied got denied. And you can see this chart tends to go up over time, and by a certain age, it's about half get declined. And these aren't even counting the people who do sort of a preliminary application without formally applying or know not to apply after talking to an agent because they already know they have a health consequence that would disqualify them, so they don't apply at all. So who should not buy long-term care insurance? Because I think that's an important question to answer before we go to who should. One, people with limited resources. If you have a lower net worth or lower income and can't support paying a few $1,000s a year, it doesn't make sense to buy a policy. It's more likely that you may spend down your assets anyway and go on Medicaid, which may help to cover some long-term care benefits. Also, if you're ultra wealthy, if you have $10 million plus, you may not want or need long-term care insurance because you can self-insure most long-term care scenarios. Also, if you're over age 75, there's a good chance you may not be able to apply and get accepted for a long-term care insurance policy. You'd have to talk with an agent, but after you get above a certain age, it becomes very challenging. And that dovetails really nicely with if you're in poor health, it also may not make sense to apply because if you have a decline on your insurance record, it's harder to apply later if you could potentially get it later. So you'll want to do preliminary conversations with your agent, explain if you have any health concerns, and potentially shop around before formally applying to see if it makes sense. Now, to get to the heart of the question, is long-term care insurance worth it? Should you go purchase a policy? Let me first start by saying this is a deeply, deeply personal decision. The people that I have found who have bought policies in the past have experienced a long-term care event. They had a parent or a grandparent who went through it and had a long-term care insurance policy, and they know the value that it can bring, or they didn't have it and they wish they had one. It tends to be the people who haven't gone through it don't buy policies. Again, it's a deeply personal decision, but the biggest benefit I see for people is that it brings in a paid caregiver sooner. And that's a huge benefit because oftentimes what ends up happening is the spouse who is not ill ends up trying to be a caregiver for far longer than they should. And that hurts them emotionally, physically, spiritually, in a lot of different ways. It brings their quality of life down as well. And sometimes they can get sick from the caregiving. So I see the policy as a big benefit to bring someone in sooner. And even if you're a widow, for example, and you are the surviving person, maybe it's alleviating the burden that a adult child would feel. Maybe they would feel like they need to quit their job to provide for care. But if you had a long-term care insurance policy, you could bring someone in sooner rather than spending down your assets. I find people have a hard time bringing in paid caregiving if they're paying from their personal assets, and they ask family members to do it or family members to step up to do it. Whereas if they have a long-term care insurance policy, usually paid caregiving is coming in from day 1 or day 90 or whatever the elimination period is. It's coming in sooner to alleviate the burden for any caregiving. If you do buy a policy, pay special attention to the benefit amount, benefit duration, cost of living adjustment, and then the elimination period. You can customize these to tweak what you're paying. If you want something that might cover longer term events, maybe you pick a 365-day elimination period as an example, so you get no benefits for the first year, but it might help protect in years 2 through insert the blank, whatever you want to protect. Cost of living adjustment, if you're younger, maybe you do a 5% as opposed to a 3%. Maybe it's compound instead of simple, but there's a lot of levers you can pull. So just understand how that will affect the premium and find something that fits within your budget and what you're comfortable paying. You also want to be aware of whether it's indemnity or reimbursement benefits. And what I mean by that is indemnity is going to pay out a cash benefit regardless of what your cost of care is, and you can spend it on whatever you want. So if you have a $4,000 monthly benefit, but your care is only $3,000, it's still going to pay out the $4,000 as opposed to the $3,000. It's not going to cap it. You could spend it on care, or you could spend it on food or a vacation or whatever you want. Whereas reimbursement, you're going to have to show proof of what you spent on care. And typically the insurance company is going to get billed directly and they'll send the payment. But it's only going to pay for whatever the care is. So it's less generous, and those tend to be cheaper policies. Nothing wrong with that. But you should be aware of how that works and how much hassle you want to go through at the time. Other thing to be aware of is what triggers benefits. You should have a clear understanding of what can trigger benefits and how you go about applying for it. So you have a clear understanding of when you would qualify and when you wouldn't. For example, if you had a hip surgery and there was a long recovery time, a life insurance policy with a chronic illness rider might not cover you because you're not chronically ill for the rest of your life. You're not going to be ill until you die. Whereas with other policies and types of benefits, you might qualify in that scenario. So you should talk through different scenarios and how you actually go about qualifying for benefits. And then finally, figure out if there's a partnership eligible policy in your state and whether your policy will qualify. These are situations where you could spend down potentially your assets and keep more of them before qualifying for Medicaid if you have this policy in place. I know that's a lot of information. Long-term care insurance is very nuanced and there's a lot that goes into it, but I hope this will help you make the decision about whether long-term care insurance is worth it in your situation, whether you want to explore long-term care insurance or self-insure. It's good to make an active decision about these as opposed to a passive decision for you. If you like content like this, I'd recommend clicking the description down below and subscribing to my newsletter so you can get financial insights into your email and be notified of when I post new content.